Hi everybody, it's Dan Kerr's DK Analytics. It's January 5th, 2017. Happy New Year, and thanks a lot for tuning in. I want to do a follow-up of sorts to the video we put out on the heels of the election where Donald Trump won the presidency in the Electoral College, and the Republicans kept both chambers of Congress and extended their lead at the state level. You'd think you'd have a big mandate to do something to bring the country closer back to its roots, and that is a constitutional rule of law, the sound money basis instead of fiat money and fiat government. But as we feared, don't hold your breath. It looks like actions by Donald Trump and tweets or whatever you call these ridiculous things nowadays, let's just call it his communication, suggests otherwise. And on a global basis, a brief remark before I continue. We have globally roughly $230 trillion of interest-bearing debt. That's up about 70 trillion in less than a decade. If we have currently the most ridiculously low, artificially low central bank money printing low, or the threat of money printing interest rates in the world. Now, what happens if we get higher interest rates because global investors, as well as domestic ones, fear that inflation is going to wake up at the consumer level, not just in asset prices? What if investors fear about national sovereignty risks, solvency risks, I'm sorry. National sovereignty is another associated story that the globalists obviously want to eviscerate, and people are starting to push back against. But what happens if we just got a 1% higher global interest rate and the globe is indebted to the tune of $230 trillion? Well, you guessed it, that's $2.3 trillion more in interest expense, which is about 3–4% of the globe's annual output, the globe's GDP. And we all know that markets tend to have manic depressive behavioral patterns. We've been in a 35-year bull market in bonds. And bonds today are a bubble of yield deprivation, which gives no hope for real returns, no solvency protection, and certainly no inflation protection. Because at some point, all the money created at the balance sheet level will end up in a money supply. After all, that's what the central bankers want, and they'll get what they want either now or later. But let me now delve into this by saying the following. We have a new post number 16 on the site, which goes through all these things in quite some detail. I wanted to augment it in an audio format with you here and see where things have gone. Remember that huge, those debt mountains in the background as I go through this, and what it will force central bankers to do, as they always historically do when things come unglued at the seams. They're going to, you guessed it, print even more, and they will double down on this until they absolutely ruin fiat currency, which is what they always do on average. Fiat currencies last all of 27 years. We're 45 years into the post-gold dollar standard, by the way, the Bretton Woods system. Let's take a look at Donald Trump's cabinet appointments and some other things. I mentioned on the video after his election a week or two later that he had an enormous opportunity to take the high road and to really do what people have voted him in for. Let's not forget, it's constitutionalists, it's conservatives that pushed him over the edge. They held their nose with huge doubts about him, rightfully so. Was afraid of Hillary, especially what she'd do at the Supreme Court, and in essence doubled down on Obama's agenda of constitutional evisceration. And they held their nose and voted for Donald Trump. Well, Donald Trump, as many of you know, his roots, and I go through this in quite some detail with quite a few links, is a creature of the left, of the Democratic Party, of statism, of cronyism, of litigation. These are the things that ail the system. And yes, he picked Jeff Sessions, and it looks like he's got some sound people at the fence that are even ready to defend the homeland. That's a darn good thing. But if we look at his chief of staff, Reince Priebus, we look at who is nothing other than a backroom operator that seeks to snuff out constitutionalists, you know, the people in Congress that want to respect, abide by separation of powers, set power of the purse being in Congress, reigning in and out of control government and an out of control executive branch by standing tall, the Congress that is, and doing the job it's supposed to. Well, Reince Priebus and his buddies, Mitch McConnell and John Boehner before him, and Paul Ryan, the current leader of the Republicans in the House, they have conspired in the past and continue to conspire to, in essence, float and legislate proposals and policy that go against the very foundings of the country, whether it is separation of powers, whether it is reinstituting federalism, states' rights, which is supposed to be supreme, and frankly, even eviscerating or threatening Bill of Rights, the whole basis for maintenance of individual liberty and the system that grew out of it. In other words, a system of untold freedom and wealth and rising living standards. So we've got the rhinos, the Republicans in name only, that are in essence dominating the Trump cabinet. And we've also got a good spattering of Democrats that are being elected or that Trump is doing business with. Let me give you one of the most profound examples of all. It is none other than the head of the Treasury. In other words, this Nunchkin fellow from Goldman Sachs that even did George Soros's bidding. A Democrat and someone that has been involved with agendas and policies and schemes that eviscerate American sovereignty, that extend statism and cronyism. So this pick, Reince Priebus, the Secretary of Transportation, which happens to be the wife of the head of the Senate on the Republican side, Mitch McConnell, a true crony, K Street crony. These are not good signs that we're going to be draining the swamp. It looks like he is filling the swamp with the very swamp monsters that have padded in untold riches the pockets of K Street and Wall Street, while thinning the wallets and overall welfare of Main Street, free market capitalism, and small businesses, which haven't been able to comply or thrive, much less hire people in this regulatory / taxation / litigation insanity that is the current not open for business state of affairs in the United States. On the GOP side in the Senate, in the House, we have Obamacare, which everybody has been promising to take out and in essence replace it with a free market or with savings accounts, medical savings accounts, competition across state lines. Well, it looks increasingly like the GOP is not going to pull out Obamacare by its roots, but institute Obamacare too. Now, mind you, these are the same people and all people in Congress, Democratic and Republican, that don't have to abide by Obamacare. They have exempted themselves out by claiming small business, 50 people or less than 50 people exclusion I mean, the height of it is of the, the chutzpah is just unbelievable. But they are now even refraining or stepping back because corporate, big companies, and other people want Obamacare to go forward. The Republicans just want to be able to take ownership, if you will, get credit for what amounts to nothing other than a highly inefficient, hugely expensive transfer of wealth, which is unaffordable for most Americans. We're talking mortgage level payments or higher. So that doesn't look like we're going to be going back to sensible policies to open for business America. It's just more of the same, i.e. the status quo appears to have won. Interestingly and very disturbingly, Donald Trump has said that he gets along very well with the head of the Democratic Party, the minority party in the Senate, Chuck Schumer. Now, Chuck Schumer is interested in blocking every possible Supreme Court nomination that Donald Trump has rallied around people that are originalists, constitutionalists, using a filibuster rule that Harry Reid in a prior era to push through Obamacare gutted. So the Republicans are more interested, apparently, in maintaining a filibuster rule instead of getting rid of unconstitutional diktats handed down by an absolutely out of control executive branch and rubber stamped by a Congress that refused to do its constitutional duty, whether it's power of purse or treaty powers, whether it's getting government back under control because they really control the purse strings. But they haven't. They've yielded it over. And Donald Trump, staying in this fold of an imperialist president without a control executive branch / administrative branch powers and de facto lawmaking, it isn't the Congress that makes the laws anymore. It's in essence the executive branch with all the alphabet soup agencies, whether it's the IRS, it's the EPA, or it's the Department of Energy, what have you. These are actually conspiring to throw sand in the gears of a free market economy, and they've done a good job. And instead of taking those down and bringing it back to a constitutional scale and size, it looks like Donald Trump is going one better in the imperialist fashion and telling companies where to invest, what to bring back to America, whether it's Sara Lee, whether it's Ford, whether it's other big household name companies. He is telling them to, in essence, bring jobs back here, close plants abroad. Carrier can also be thrown into that mix, or else get hit with massive tariffs. The latest one is Ford. Well, first of all, the president doesn't have any constitutional authority to do what he is doing. Yes, he has the bully pulpit, but wouldn't he be better off using the bully pulpit to bring regulatory and tax and litigation sanity back to America? Of course, that's a much tougher road to pursue and to have success with. But that's the road that needs to be taken. And speaking of Ford and their Mexican plant and not deciding not to shift production or down to Mexico of a small car, fact is that the reason Ford and other companies have done this is not primarily the labor cost advantage. It's about $600 per vehicle, a lot of which is eaten away or eaten up by higher transportation costs if it's brought, to the United States or anywhere. The real issue is that Mexico has access to zero or very low tariffs to more country than America does. So what's the message? It isn't to raise trade barriers, to act pugnaciously or imperialistically, but it's to knock down trade barriers, not build them up, because that could get us back into a tit-for-tat trade war. Hooverism revisited. Hoover, by the way, was an extremely successful businessman in a much wider sense than Donald Trump. And look at what he did with and the Smoot-Hartley tariffs that Hawley tariffs that got the whole world into a depression. Well, we're not going in a constructive trajectory on this front, on the rule of law front, on returning to constitutional separation of powers front. I don't even need to mention federalism. And we're not going to get, it appears, very good relief on the Obamacare front, which is killing families that can't afford to pay for health care anymore in a wide swath of people. So then the question is, what's next? Well, if we double down, and this is what we go into in our post 16, on in essence the status quo, with a new, Donald Trump trade warrior, Hooverism, bomb throwing, laced into this toxic public policies to mix, I don't see how that's going to get America back to being open for business. And that suggests, especially also when considering Donald Trump's history of huge Democratic Party support, the Clinton charity fraud, using the tax laws to stiff creditors, availing themselves of litigation to crush paying contractors what it was due to them, and also making himself, availing himself and his enterprises of the very, very anti-constitutional Kalo versus New London decision, which in essence allowed the government to okay or green light people getting property taken from them if a developer was big enough. Well, hello, Donald. And lots of American families have been forcibly evicted from their property so that Donald could come in and build another trophy property. This is the antithesis of the Bill of Rights and the sanctity of property rights, which is tied at the hip to liberty. And that in turn all comes together to form the incentives that drive sound decisions and bring productivity. So big question marks on all those fronts. I think what we're looking at in essence is doubling down, unfortunately, on the status quo. We are also looking at both stock and bond market bubbles. I mentioned at the outset that the world is 230 trillion in debt. The United States some 47 trillion in debt in terms of the government, the federal, the state, and the corporate and the private level. So just 1 percentage point higher interest expense is in the United States going to be a strong headwind for any of Donald Trump's fiscal stimulus measures. And those fiscal stimulus measures, frankly, are put out there without even mentioning that what really ails the beast is that the government has become way too big, way too unwieldy, way too wasteful. Even liberal government reports are talking about $200 to $300 billion in annual federal government waste and fraud. So we're not really getting where we need to go. And Donald Trump, I don't think, is the guy in charge, but let politics be politics. We can take our cue as investors from status quo sustained. And that bet, coupled with nosebleed valuations of stocks and bonds, suggests to me that we want to, first of all, take money off the table, put it into the security of safe cash, T-bills. The government can print the money to pay it back. Going out into physical precious metals, true money over time, which have been manipulated down very grotesquely. It's no longer conspiracy theory, it's conspiracy fact. We go into that into great detail. In essence, to buy what central bankers and central planners have been pushing down and to sell what they've pushed up in price to absurd levels, where no hope for any real return going forward or solvency protection or inflation protection is on board. And that, in essence, more or less comprises the majority of stocks and bonds, at least investment grade bonds. And again, recall that stocks and bonds are tied at the hip. It's through a discount rate. That's the 10-year Treasury. The 10-year Treasury is up about 80%, 70% from the all-time low, about 1.4% this past summer. And I think that's a preview of coming attractions as bond vigilantes and overseas creditors decide that they don't want to hold the dollar or can't hold it. They need to deal with domestic expenses. These things can come together, and we don't have a stock market that can go up in the face of rising, substantially rising discount rates, because it reduces the net present value of stocks. It's based upon the 10-year Treasury yield plus a risk premium. All right. So if that 10-year Treasury yield is bound to go up after a 35-year bull market in bonds, a very artificial one, especially since 08, then look out below. And layer on top of that the fact that the whole globe's economy is in a recession, not a growth mode, whereby earnings could easily get a 50% haircut. And you can easily put together a scenario where stocks could be worth half of what they are today, which in turn is not just a risk if you stay on board, but the huge opportunity to take a dividend yield from 2%, drive it up to 8%. Sell your stock basket at 100, buy it back at 50, say an S&P index kind of investment. And not only will you be able to buy twice as many stocks, but your dividend yield will be twice as high. So you can go from 2% to 8%, and your capital gains prospects will be much greater because returns are integrally related to how much one pays for a normalized earnings stream. Right now, you're paying way too much. But we have stock and bond prices up because central bankers, central planners want to sustain asset bubbles for themselves, for their own balance sheets, for their fractional reserve member banks' balance sheets. But that's not for the benefit of individual investors, right? And all the program trading, the algorithms that define market levels together with central banks, they could be overwhelmed. And in fact, if we have a turn in the other direction and these algorithms and computer programming schemes that determine price levels see that we go below a 30 or 60-day moving average, then they can really bite and reverberate on the downside. In other words, drive prices further down. And let's not forget, history shows we go from boom to bust. We don't go to average valuations. Either in stocks or in bonds, we go either way above today, no yields on bonds, 25 times S&P 500, or we go to the other side. In other words, PEs get crushed as people want higher risk premiums, higher earnings yield, and the same holds for bonds. And our global balance sheet is a lot worse. Our productivity is a lot worse than it was. So earnings growth is going to be much more encumbered. We have much more negative demographics, an aging global population, and we've got policy insanity, a toxic public policy stew, driven not by common sense and property right protections, but by anything but. And I don't see how Donald Trump is going to get us out of that. How could one man? But he could shift to the other side. I don't see it. What's the takeaway? Take this opportunity to allocate while you still can, with stock and bond valuations being elevated. Go to save cash, take money off the table from stocks and bonds, get ready for what could be a great purchase opportunity in stocks. I think bonds will be under the weather longer, and enjoy this manipulation to the downside purchase opportunity in physical precious metals diversification. That's all from here. Happy New Year once again. We live in very interesting times. I think the risks, and by extension the opportunities, if we act correctly, strategically speaking, are bigger than they have been in a long time. Bye-bye.